Hi, my name is Leon Rowe, currency trader and trading coach at trading180.com. And in this video, I'm going to be talking about Forex trend trading versus Forex value trading and the difference between both and why trend trading isn't what you think it is. And for those who are actually looking to trend trade and doing it unsuccessfully, I'm going to be showing you exactly why trend trading is extremely difficult. It's good looking back on it on hindsight, but it's not the best way to look at the market. And I'm going to try to persuade you on looking at the market from a value perspective rather than a Forex trend trading perspective. And as we know, trend trading is touted online, YouTube, everywhere, Facebook, follow the trend, follow the trend, follow the trend. And it seems easy, doesn't it? But again, if you're watching this video, you know that it is not. And if it was, then why are pretty much 80 to 90% of traders not making money in Forex, as indicated by the new ESMA rules, where brokers have to display what their clients are, the numbers and figures of their clients' accounts. So it says usually you'll see something between like 75-80% of clients don't make money or lose money, and that doesn't take into account probably the ones that are just barely breaking even, right? So the problem I find with Forex trend trading, and believe me, I've tried, right? Obviously getting into Forex just like everyone else, my story's probably no different to yours. When I first got into trading, and you're watching hours and hours of videos, free videos online, and everyone's talking about trend trade, right? All you got to do is look at a price chart, and if it's going from bottom left to top right, then you're in an uptrend, and if it's going from top left to bottom right, then you're in a downtrend, right? That's pretty much what you're taught and told, right? And there's other indicators like the moving average, etc. But from a purely price action technical analysis, which is basically what I'm saying, PATA, the problem is where does the trend start, right? From a technical analysis, price action perspective, right? Because I've found this very difficult. By the time I see a trend, it's too late, right? And yes, higher highs and higher lows are define an uptrend, and lower highs and lower lows define a downtrend. But again, as you know, if you've tried to look for higher highs, higher lows, and look for a trend, by the time you see it, you're buying at the highs or selling at the lows, right? So where does the trend actually start, right? And again, it's very subjective when it comes to where the trend starts. Every trader starts the chart differently, right? So every Forex educator that you see online starts it differently. Now I'm going to go through this example, right? So let's say, for example, you got the British pound, US dollar in a daily chart. Everybody, 99 times out of 100, probably 100%, if you asked 100 traders, would tell you that this is a downtrend. We got clear lower highs, lower lows being made, etc., etc. So top left, to bottom right is a downtrend, right? So we started here and pretty much ended up down here. So where we should be from a technical perspective, bearish, right? And looking for the bearish trend. But what I'm going to do is now move the starting point, right? So all you're seeing is this at the moment, right? From this high to this low. But if I zoom out, then that moment there, this area here is actually this area here. And in fact, now we're going to start from here. Now, this looks a lot different, doesn't it? It looks like we are in an uptrend. Bottom left, right, to top right. That is an uptrend, right? With a pretty much what traders may consider a deeper pullback into, if you trade Fibonacci retracements, maybe into some sort of 61.8 Fibonacci level, right, between this low and this high, right? So you got to follow the trend. So before we were in a downtrend because we started here, right? But why did we start here? It's just because that's what our analysis is. What are the rules? Why would we start here, right, and not start here? And ask yourself that question, or ask the person that's teaching you to trade these questions, because I haven't figured it out, and I can't see any really good reason, right? And I've watched hundreds and hundreds of videos over the years, right, on why a trend is supposed to start at a particular level and not, or exchange rate, and not another exchange rate, right? How far do we go back? You could say, all right, then, well, 2018, highs, as we are in obviously 2018 right now, to 2018 lows is the trend. But again, if those are your rules, how far do you go back before saying what is an uptrend and what is a downtrend, right? Are your rules only 3 months, 6 months, 9 months, 12 months? Where are the rules? And again, if you're just looking at technical analysis, why would that even matter as far as the time that you're going back? Again, I'm going to go back even further, right? So we've seen, this is the same chart, British pound, US dollar, right? So the first chart we saw was a downtrend. Then we moved the goalposts, we moved the starting point back, and now we're in an uptrend. I'm going to move it back even further, and now we're in what traders would consider a downtrend again, right? So from top left to bottom right, we are in a downtrend, right? And if you're saying something different, lower highs and lower lows are being made, lower highs, all right, this is a bit of a pullback, and then the trend continues, right, to the downside. We're making clear lower highs and lower lows. Why would you argue with this? You might look at, have maybe a filter on because this is a daily time frame chart. You might think to yourself, well, who's going to go back to 2016? But just imagine, as markets are fractals, if this was a minute chart or a 5-minute chart or a 10-minute chart, this would look, if I blank this out, this would still look like a downtrend, right? Regardless of the time frame. So why does the time frame differ, right? When if you're trying to look at this from a time perspective, and why would you go back to 2016 to identify a trend, right? So the first, again, just to reiterate the point, where is the starting point when looking for a trend? And this is why traders have such a difficult time trying to identify the trend, right? Even, from top-down analysis, and traders saying, oh, do your top-down analysis. Again, I've done top-down analysis on a daily time frame chart, which is what a lot of traders would use for top-down analysis. And you can see you get 3 different perspectives from the higher time frame chart. So the second thing I want to talk about as well, spoke about where does the trend start. The second issue and problem with trend trading and just looking at technical analysis is, where does a trend actually end, right? So I put in brackets, is it a deep pullback, or is it higher highs, higher lows, lower highs, lower lows? And what I mean by that is this, is if we go back to this chart here, and let's say this is all the information we have, but what I'm going to do is I'm going to act like and blank out some of this chart so it would look like it was in real time, right? So this is the same chart, but in real time, and you didn't know what was going on, right? You had no idea what was happening to the right of the chart. So the question is, at what point does this, start turning from a deep pullback into an actual downtrend, right? So what I mean by that is, this is obviously an uptrend. Everyone would say higher highs and higher lows are being made. Has the trend ended, right? Is this a deep pullback, or are we in a downtrend? Again, most traders would say we've broken some structure. Traders would consider a structure and support and resistance, but we are still in an uptrend. Is this now an uptrend or a downtrend? Are we taking it from here, or are we still taking it from here? If we're taking it from here, right, we are still in an uptrend. What about here? Are we in an uptrend or a downtrend? Again, why are we starting here and why not here if we're looking at a downtrend, right? But we would be looking at here because this is where we had considered the market to be in an uptrend, right? We're not just going to suddenly change now because the market's doing a deep pullback. And again, what about here? Is this now a downtrend? Now, again, you could argue that this is a deep pullback, right? Yes, the market has been coming down, but is this not, again, a 61.8% Fibonacci, right? Retracement, is this not around just below fair value? We're still, right, from the low to the high. Where are the rules that say that we are now in a downtrend? And let's just consider that we are in a downtrend now, right? Let's say, all right, traders will say we are in a downtrend. Now you're in a downtrend. You've missed all of this move, right? Because if you're a trend trader, you're not supposed to be looking at downtrends, right? Because you're just looking at what? Retracements. You're looking at retracement trading. You're looking at support, and you're looking at buying. By the time you consider this a downtrend, if you consider this a downtrend or a deep pullback, it's too late. You're selling at the lows. You've seen the trend way too late. And then obviously that is just a deep pullback, or whatever you decide it to be, right? If it's a deep pullback, or is it a downtrend, this is where traders start to get confused. Are we in a downtrend? Is this just a deep pullback? Technical analysis just doesn't explain these things clearly, right, and definitively for me. And believe me, I've been through and I've paid for a lot of the popular courses, right, that you guys have probably paid for. And like I said, if trend trading was as easy as just looking at structure, higher highs, higher lows, and identifying where support and resistance was, then we would all be billionaires and on the beach somewhere with friends and family, relaxed and chilling. Now, if trends aren't the answer, and looking for trends and chasing trends, etc., what is the answer to trading? And I'm going to basically give you my perspective and what had changed my trading forever. So it's value trading. And value trading comes from fundamental analysis. Now, fundamental analysis, your eyes might glaze over and you might be like, oh, fundamental analysis is boring, it's complex, whatever, you've tried it before, it hasn't worked in the past, and price doesn't react to fundamental analysis. And I have to say that you are wrong, and we can have this debate. But I did produce a video which is does fundamental analysis work? So I go into a bit more depth and proof as to why fundamental analysis does work, and there are other aspects to fundamental analysis which traders don't take into account when just talking about fundamental analysis, which is basically sentiment, risk sentiment as well, right? Which is basically like the counter to fundamentals, right? But anyway, value trading and fundamental analysis gives you an edge, right, when you're looking beyond price action and technical analysis, because with fundamental analysis you establish value, right, and you can establish undervalued currency, right? So price does not always reflect value, and value does not always reflect its price. If you believe so, then the market, again, there's a thing we're saying, the market is always right to a certain extent, but no, because if it was always right and it was always, the market is always priced in the value, then why we wouldn't have undervalued and we wouldn't have bargain prices, right? There are moments in time where the market is potentially wrong, right, about price and value and price doesn't always match, right? So if you're a believer in price not matching, then you're on the same side as me, and then we can attempt to now capitalize from our belief systems, right? So fundamental analysis, simply we establish currency value, right, beyond the price chart through things like interest rates and inflation and the relationship to inflation, as well as macroeconomic data, and the business cycle, right? And through that, trading currency pairs, strength against weakness, what we can do is predict ranging and trending market states, because ranging market states occur when there are two strong or weak currencies against each other, and trending markets are when there are strong versus weak currencies, right? So it's pretty straightforward, and that is only determined through fundamental and sentiment analysis, right? So one of the major, if not the major advantage to trading value and looking for value and fundamental analysis is you get in on the beginning of potentially big trends with the smart money, because you're buying at bargain prices. You're constantly looking for a bargain, right? And when the market does turn around, right, when value does kick in and the market decides that this is undervalued, right, in alignment with your analysis, you are at the beginning, and you will be at the beginning of trends rather than chasing trends, right? You're buying low and you're selling high. In every other market, right, whether it's stocks, commodities, etc., right, it's driven by value, and that value is determined by different things. You know, in commodities it's supply and demand, etc., right? But there is a value element to trading which you do not see on a price chart, right? And fundamental analysis gives you better currency selection, because you've already decided before looking at a price chart what currencies you should be buying and what you should be selling, right? And then you just go to that currency pair, you look for strength versus weakness, and then you look for a price on the price chart, see where price is. Are we undervalued? Are we at fair value? Or are we at the top of the market where we don't want to be a buyer? That's it. Also, it makes your trading job, or job as a trader, right, easier, because all you're then looking for is your directional bias, right? All we're looking to do is buy. If all we're looking to do is sell, depending on if we're buying at bargain prices and what currency we're buying. So what I mean by that is, like, a lot of traders will just buy for the sake of buying because of a technical setup, right? And they get, you know, day traders, and there's nothing, you know, against day trading. I couldn't make it work, but there are traders out there that can make it work. But the gentleman I was taught by, he pretty much didn't day trade, and this is the reason why I don't day trade. And what he taught me is not to confuse activity with accomplishment. Just because you see a setup on a technical price chart doesn't mean you know every setup is an opportunity, right? If you don't know why you're buying it, and it's simply because you see a pin bar against a level of, you know, support, and you're seeing the RSI oversold, if that's good enough for you, then fine. But if you want to take your trading to the next level, this is what you need to start doing, right? Don't take every opportunity technically, right? Don't confuse activity with accomplishment. If you take 30 trades in a month, right, or 60 trades in a month, or 90 trades in a month, right, that doesn't make you a trader, right? Accomplishment, consistency is what makes you a trader. If you take maybe 2 or 3 trades in a month, 5 or 6 trades in a month, 10 trades in a month, 1 a week, 2 a week, whatever, as long as you're making money, right, and you're managing your risk, I'm more about accomplishment. And don't confuse activity with accomplishment, right? Resist the urge to just trade every single opportunity. It's all about taking the right opportunity and looking for value on a price chart and beyond the price chart. So how do we identify value on a price chart? Because there is a way, right? We the price charts reflect fundamentals, and there are moments obviously on price charts where we want to look to buy. And how we look for clues on a price chart is by identifying supply and demand zones, right? Because supply and demand zones are where value resides. And what I mean by that is, we know that highs, lows, higher lows, and lower highs are areas of value, right? Or potential areas of value, right? Or they were areas of value, and the proof is this, right? So if we got to move up, we got to move down. This is demand, and this is supply, This is a bargain area. And how do we know that? Because prices, if this is a price chart, right? This is a price chart, this is price, and this is time. We know that to be a fact because we can see prices went higher. There was a lot of demand down here. Now, when prices start to pull back, this is seen as an expensive area, right? An expensive area. Why do we know that for sure? Because prices couldn't go higher. Buyers are no longer willing to push prices past a certain point, right? But then we get, if prices come up, right, and can't push past this area here, then we know that again, demand, right, isn't strong here. Because if it was, then prices would go past this previous expensive level, right? So if prices go past the expensive level, right, creating higher lows, higher highs, what traders would consider higher lows, higher highs, we know this area has to be another bargain, has to be a bargain, because it's proven to be, and it's the strongest area of demand, the same way that this low here was a strong area of demand because prices went up, right? Prices pushed past this previous level of what traders would have called supply and an expensive level, and prices went higher. So this is the strongest, or potentially the strongest area of demand in the future, because if prices do come back down here in the future, right, buyers have a second chance to buy at that price, right, whatever price this was, providing that the fundamentals for that Forex pair or that commodity or that stock or whatever it is that you're trading, right, is still intact, right? So we know that demand zones and supply zones are areas on a price chart, right? It is proof of value and potential value again in the future. So support and resistance areas are old supply and demand zones, right? So support does not always represent value, right? And I put in there complex pullback, and you can watch my video on the complex pullback, but I'm going to explain why support and resistance areas are old supply and demand zones, right? And why support and resistance zones do not always represent the best area to buy. So if we got higher highs, higher lows, a lot of traders would look at this area, right, as broken resistance turned into support. But if we know that this area is the strongest area of demand, higher lows, higher highs, then traders, where they're only buying at around fair value, or wherever this resistance turn support level is. This is always going to be the best area to buy, right? In the same way that this was the best area to buy, right? And let me put it another way. If the market was ranging, right, or in a range, where is the best area to buy in a range? At the lows, at the lows, at the lows, right? That's where traders would be looking to buy. This is a low, right? Higher low, higher high, right? This is where it was seen as an absolute bargain, so much so that prices came up here and buyers still considered this price a bargain, and prices went higher past this previously expensive area, and it was expensive right here. So this has to be the strongest area of demand, the cheapest, the bargain value, because when prices got up here, I mean, you look back on the past, what are you thinking? I wish I would have bought down here. When prices were down here, I wish I would have bought down here. So when you're seeing an expensive area, this has to be the bargain, the best area potentially to buy when you're looking at a price chart, not levels of support and resistance that are randomly, say randomly, but that you see this type of setup because you're buying up somewhere between an expensive area and what is a cheap area, which is known as fair value, right? This is fair value. Anything below fair value is what? Cheap and a bargain. And this is where is the best place to always buy, right, on a price chart. Is areas of demand, or areas in the reverse would be an area of supply, right? So we can identify potential value in the future from proof of value, which was demand zones and supply zones. So let's get into some chart analysis and some examples on what I'm talking about. So here we are on the dollar yen, and the fundamental analysis was done without even looking at a price chart, right? So what I mean by that is this year, the US dollar has been raising interest rates, and the Japanese yen has been continually looking to weaken their currency to stimulate inflation, right? So looking to be a buyer, right, of this currency pair. So all we're looking to do now, that makes our job a whole lot easier. All we're looking to do is looking to be buyers. So we're looking for demand zones, right? So higher highs and higher lows are areas of demand, and we can see we have higher high, right, higher low, higher high, right? So we know we can draw our demand zones at this area right here. This is our demand zone where we are looking to be a buyer of the US dollar versus the Japanese yen. And as we go forward, we can start to see where we get a reaction, right? Reaction to this this demand zone. This is where value traders are looking at value as this was value in the past. Prices went higher. If traders get a second chance to buy at value, this is what they're going to do. So we can see prices ended up going higher and coming back into this demand zone. Now, like all levels, whether it's support and resistance or supply and demand, the more times a supply and demand zone is touched, the weaker it becomes. And you got to think about it from a value perspective. As well as something may have changed fundamentally or sentiment wise, but the more times a level is touched is the more often or the more common it seems, right? So let's say, for example, you were able to buy a product, I don't know, it could be an iPhone, for example, the latest iPhone 4, half price. You're going to rush out and buy probably 2 or 3, right? See if you can sell some on eBay. But then the price of an iPhone becomes, half price for an extended period, or or just Apple decide that they want to cut the price of, iPhones, period, to half price indefinitely. Now demand is gonna obviously slow down. You were the first to get in, right, when iPhones were first slashed to half price, but now everyone's buying at the same price, and now demand doesn't seem as strong. So the more times prices come down and the familiar, right, at a certain exchange rate, is the weaker that demand becomes. And the same thing is true within the markets. So just keep that in mind, right? So moving on to the next one, we do have a breakthrough, and then we do get some demand created down here, and we've got again some higher highs, higher lows, right? So we've got higher high with higher low created. So once we get that created, this becomes our demand zone, right? So what we're looking for, we know that this area here, right, from a candlestick perspective, this area here is where buyers saw this as a bargain and started pushing prices higher. So we know that if prices ever do come back anywhere within this zone, we want to be buyers. As you can see, this is exactly what happened. Buyers on a pullback decided this was a bargain, prices started going higher. Again, there was a second chance to get in at this price level, and prices ended up again going higher, right? As we go higher, we start to create more higher highs and higher lows, right? So higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, etc. So as we've created these higher highs, higher lows, these are the zones that we're going to be drawing on the price chart. These are demand zones, and again, all we want to be is buyers of the US dollar. We're not trying to pick the top. We're just looking at potential bargain areas, because prices were cheap down here, making higher highs, higher lows. This was an expensive area, and then prices obviously went higher. So if prices ever come back down here, this is the first area where we want to be potentially looking to buy. And as prices come back down, we get an opportunity. You can see prices react in this area. But what we do have is maybe some weak demand, right? Supply and demand isn't perfect. Anything can happen. Fundamentals, sentiment, what I call the zero-sum game is going on as well, behind the scenes. And those are the three reasons for, price movement, which is fundamentals, risk sentiment, and the zero-sum game. There could be some negative sentiment, right? It doesn't mean that demand doesn't work, etc., etc. All it means is that it allows us to buy the US dollar for a cheaper price. We might have bought here, it might not work out, right? Or again, this is a daily time frame chart. If you trade a daily, depending on your risk reward, you may have still made some money. If you zoom down into a low time frame, like for example the hourly or the 4 hourly, which is what I trade, then this was a definite trade and enough risk reward to the upside, depending on obviously the entry and the stop loss, right? But let's just say prices managed to come down to this demand zone. Prices again react off of this demand zone. Prices go higher, right? Because this was an area of demand. This is an area of demand, and you can see where prices react from, right? Traders are buying, more demand than supply, as this is seen as a cheap and a bargain area. So again, we can keep going forward as prices have created higher highs, higher lows, right here. Higher highs, higher lows. And then we're waiting for prices to come back into these areas before looking at an opportunity to buy. And as you can see, prices did react in this area. But then we got a second opportunity as prices broke down into this lower demand zone to be long. So prices were cheap here, prices were potentially cheap around here. Lows and higher lows are the areas where you want to look for buying opportunities. And if you want to take advantage of a potential trend, this is how you take advantage of the trend. You're not looking for trend trading. You're not looking for after the fact. You're looking for evidence that this was a bargain in the past. And these are the areas, these are the best areas where you should be buying. And at this point, you're at the beginning of a trend. You're always going to be at the beginning of a potential trend when trading and looking for value rather than looking to trend trade. So let's look at a supply zone on the euro dollar. Again, this being the daily time frame chart. And the supply and demand zones that I plot, the reason why I use daily time frame charts is because that's where the most supply or demand is, right? Lower time frame traders will look at higher time frame charts, right, and levels, etc. You don't get higher time frame traders really analyzing lower time frame charts. there is more supply on a daily than there is going to be on an hourly chart or a 15-minute chart, right? So you'll have all traders looking at time frames like, the daily time frame, but you won't have all traders looking at time frames like the 5-minute, the 10-minute, the 15-minute, the hourly, right? So even if you don't trade the daily, you're aware of the daily time frame chart, and the daily time frame chart is where you have, the most supply. When I say the most, I mean obviously the weekly and the monthly charts are where you have really the most supply, and the yearly, etc. But this is the daily is where I will look for my supply and demand zones and then look to trade intraday, right? So we use these daily supply and demand zones and then look to trade either on a daily or an intraday time frame. So again, going back to lower highs and lower lows, you can see that the market has been making lower highs, right? Clear as day. So what we're doing is we're waiting for price to come down, come up into an area where this is considered a bargain for the US dollar, right? This is a bargain for the US dollar. What we're looking to do is look for bargains when before looking to trade. The US dollar again is GDP was brilliant. It's been brilliant this year for the second quarter of the year. And you also have them raising interest rates, whereas the euro, and this is easy to find, you can Google it. The euro, on the other hand, is obviously looking for inflation and lagging behind the US dollar in terms of, the economy and inflation. The US dollar, right, was the currency to buy, and we're just looking for opportunities on the price chart, right, where we feel that there was potential value for the dollar. So again, if we move forward, we start to see lower highs, prices come up here, and we sell off. Again, we start to make lower highs, and then prices come up into this lower high here, and then we get a bit of a sell-off. Prices come back up into this area, right, which is considered a bargain for the dollar, and then we do what? We sell off. And again, I just want to reiterate that the work is not done from a technical perspective, right? You wouldn't be able to determine value, right, and real value if, for example, the US dollar had suddenly now decided to cut interest rates, as unlikely as that sounds, and the euro gained strength, right? We're not looking at just technical patterns to decide whether we want to be buyers or sellers. We have to have patience. We have to wait for price to come to us and look for bargains which don't present themselves every day, but when they do, it gives us the highest probability and the highest quality trades that we're looking for to take advantage of the Forex market. And again, you can see this was an area of value, and you can see exactly what happened. We have areas of value, not necessarily the strongest areas of value, right, but we have supply nevertheless, and you can see the reaction. You can start to see reactions from previous areas of supply. As we go forward, we enter into a bit of a what they call a range, price acceptance, or an accumulation. However traders want to refer to this sideways ranging market, right? And then we make some lower highs and lower lows. So what we have here is a high, a low, lower high, and lower low. So once we identify that, we can start to plot our supply zones, and then when prices do come back up into areas of supply, areas of value, we can start to see where we get some reactions, right? We don't get necessarily a massive reaction off of that one. Again, we don't know what happened and what was happening from a sentiment perspective. or from a a stop hunt perspective, what traders would refer to as a potential short squeeze, etc., right? Which is something that I will go into probably in another video. In fact, I've gone into I think it's a video called Why the Markets Move. It's on the YouTube channel. If not, I will definitely put it up there. Again, we come back into an area of value for the dollar. Again, we sell off. You can start to see why things start to be easier for you as a trader. You're not chasing the trend, right? The trend is already, in your, I'll say already in your favor, but you're buying at bargains, and as a result of that, you're in at levels where you could potentially be entering at the beginning of a trend, the beginning of a trend, the beginning of a trend. You're not, trying to catch a falling knife. You're just buying at bargain areas, managing your risk, right? Sometimes, again, it's touched several times. It's a common area. You can delete those types of levels. If they break through, price come up to this area here, and then again, we start to react. And if you do think that this is just from a slideshow perspective, and you're thinking, this is just in hindsight, these levels I had previously highlighted on my weekly analysis, supply and demand technical analysis videos. You can check them out on the channel every week, and these levels were posted again, just as just to say that this is proof, and this is not hindsight bias, right? Guys who've been following me for a while know that I've been bullish on the dollar. Why would I ever be buying the euro? And these are the opportunities and levels, right, that we looked to identify. So, identifying value in Forex. I have a free fundamental and sentiment analysis course, which is available at trading180.com/fundamental and sentiment analysis. The link is in the description box below as well. It's absolutely free, right? My gift to you. Fundamentals and fundamental analysis is rarely understood. Traders will just try and trade Forex, factory and news releases, and that's not the way to trade fundamentals, right? Fundamentals and sentiment analysis should keep you on the right side of the market more often than not, keep you in a trade for longer as well as just improve your trading selection, currency pairs, predict potential ranging and trending markets, right? Will you get it right all the time? No, but you will have a good idea of what should be happening within the market, and it will give you a clear direction and a clear bias, right, as to when you're trading. And the reason why you're looking at this and watching this video is because that support and resistance trading and trying to follow the trend from a technical analysis and price action perspective just does not work. There are people that do make it work, fine, good on them, but and I couldn't make it work for me, right? It's no shame to admit or anything like that. Everyone trades differently, but if you're like me and you couldn't make it work, right, this is what potentially can work for you. So free fundamental and sentiment analysis course, right, gives you the basics and what I was taught from my mentor, who was an ex-hedge fund trader, and you'll get all the information there. Send me an email if you are having any problems, and I'll be happy to get back to you and explain certain things if it's not clear in the course. I would also like to definitely hear back from any of you guys who have applied fundamental and sentiment analysis as taught by me and are having some success with it as well, right? So you can also get the supply and demand zone Forex course at the website as well. If you want to trade supply and demand, there's over 7 hours of content from a video perspective and a lot more in my weekly videos, which I post for the paid members. Hours and hours and hours of video analysis where I go over, all of the currency pairs, not just the ones I cover in the weekly supply and demand videos. I think there's about 11. I go over maybe about 27, 28 pairs every week, identifying the supply and demand zones, right? The best trades, all the odds enhancers as well, because not every single supply or demand zone should be traded. There are odds enhancers on each supply and demand zone. They are not created equally, and you will learn exactly how to increase your chances of trading the best supply and demand zones, right, in the course. So the fundamental course and sentiment analysis course is absolutely free for you. Take advantage and let me know what you think. If you enjoyed this presentation, like, subscribe, share as well. And also, if you are trading support and resistance, still trying to trend trade, and you're learning from somebody, just ask them the question, why do we start the trend from where it starts? Like what I went over earlier in the video, and see if you can get a definitive answer, right? I even showed them, this video. So take care, and speak to you soon.